Most traders are looking at August and seeing a breakout. I am looking at the same chart and seeing a trap waiting to trigger. There is one danger zone and one hidden opportunity in this pair today. I will show you both, including the exact price that invalidates every single bullish thesis. Stay until the end because I am giving you 3 entry and exit levels you can use the moment this candle closes. Here is the session bias. On the daily and 5H, trend is long, that is a fact. But the real trade is not trend following. It is a fading opportunity inside a compressed range. We are range bound until proven otherwise. Write this number down. If we break and hold above 0.7279 today, the whole structure shifts and I turn aggressively long. But below that, every rally is a sell until we retest 0.7212. You are not late. You are early to the rejection. Let's go to technical deep dive. Let us walk the chart from the top down. On the weekly, August is still inside a 6-month descending channel. The daily 200 moving average is sitting just above 0.7300, acting like a brick wall that price has not touched cleanly in 2 months. So already, the ceiling is real. On the daily, the MA20 is at 0.7230 and the MA60 is at 0.7205. Price is above both, so the path of least resistance looks up. But here is what most traders miss. The 4H chart is showing exhaustion. The last 3 higher lows are getting shallower, and the MACD on 4H is curling down with histogram bar shrinking. That is negative. Momentum divergence while price is still near the highs. The 60-minute chart is even worse. We have a rising wedge that began at the London Open. The MA20 on 60M just crossed below the MA60 for the first time in 12 hours. That is a micro death cross. Daily support sits at 0.7212, then 0.7187. Daily resistance is 0.7258 and the major line at 0.7279. Between 0.7258 and 0.7279 is the kill zone. Longs get trapped there. Coming to fundamental driver and cross-linkage, now the news. Australia dumped tax breaks for landlords to help young people buy homes. That is a domestic political story, not a currency driver. Do not trade it. The real driver for August is not Australian housing policy. It is China, iron ore, and global risk appetite. Australia is the China proxy. Every time Chinese economic data disappoints, AUD bleeds. And overnight, iron ore futures in Singapore softened for the 3rd straight session. That is the hidden weight underneath this price action. On the cross-asset side, watch USD JPY and the Nike. When Nike falls, risk sentiment sours, and AUD falls with it. Last night, Nike closed lower, and USD JPY held below 149. That is a quiet warning for Aussie bulls. Also watch gold. Gold above 2040 is inflation and real yield stress, which historically pressures high beta currencies like AUD when the dollar stabilizes. The 1 to 2 week lean is neutral to bearish unless China announces significant stimulus. The exact event that invalidates my thesis is a surprise. Iron ore inventory draw and a daily close above 0.7300. Until then, treat every spike as a sale. Most people will skip this part, but this is where money is made. Keep watching. I will give you 3 strategies: conservative, standard, and aggressive. All with exact prices. Strategy 1, the sniper. Conservative. You do not trade until price touches 0.7279 for the 2nd time today. The first touch you ignore. On the second touch, you look for a bearish rejection candle on the 15-minute chart, preferably a pin bar or an engulfing bar. Entry trigger is a sell limit at 0.7278, or a market sell on the close of that rejection candle. Stop loss goes 4 pips above the local high at 0.7284. Logic is simple. 0.7279 is a triple resistance level from daily, weekly and 4H charts. Target 1 is 0.7250. That is a 2-to-1 risk reward. Target 2 is 0.7220, which is 4 to 1. What voids this setup is a clean 4H candle closing above 0.7285. If that happens, the sniper trade is dead. Strategy 2, the active trader. Standard. You wait for a clean retest of the 0.7212 support zone. Not a wick, a full body candle closing inside that zone. Entry is a buy at 0.7215 with confirmation that the 5H MA20 is still pointing up. Stop loss goes 6 pips below the next support at 0.7181. That is a 34 pip stop. Target 1 is 0.7245, which is almost 1 to 1. Target 2 is 0.7265, just below the wall. Once target 1 is hit, you move your stop to break even and let the second target run. This is a mean reversion play, not a breakout. It works because the daily trend is still total and institutions defend the support level. Let me pause here. Let us see how aligned we are. Type your orders range for the next 24 hours in the comments now. High and low. I am reading every single one. Strategy 3, the aggressor. High risk. Counter trend only. If price spikes above 0.7279 and immediately fails within the same 60-minute candle, you enter a market sell at the close of that fake-out candle. Stop loss is tight, only 3 pips above the fake-out high. Target 1 is 0.7245. Target 2 is 0.7220. The logic is chasing trapped breakout buyers who get stopped out. But hear me clearly. Only for those who know how to lose small and manage risk aggressively. If you cannot take a loss in under 5 minutes, do not take this trade. Invalidation is a second consecutive 60-minute candle closing above 0.7285. That would mean the breakout is real, and you are on the wrong side. Always remember, never risk more than 1 to 2% per trade. No positions through the next RBA speaker or Chinese data release. Stops are non-negotiable, especially on the aggressor strategy. Here is the one most critical level for the next session. 0.7212. If we break that overnight, the whole bullish narrative collapses and the next stop is 0.7187, then 0.7150. Tomorrow, I am focusing on the divergence between Bitcoin and the S&P 500 because that will tell us whether risk assets are about to roll over. If you want the full breakdown on that divergence, that video is live now. Check the end screen. Smash like if this analysis gave you a clear plan. Subscribe and hit the bell for daily coverage on all 8 assets. I will see you in the next one.